Greetings, all. It is hump day. It is September 17th, 2025. This is a day we've all been waiting for, guys. We have the Fed. Gosh, Jerome Powell actually is talking like right now, I think. We fully expect that there's going to be a quarter-point rate cut today. Obviously, you never know, but that is the overwhelmingly favorite when it comes to the betting odds, at least, and what most economists are predicting. But we've got some other news we're going to be talking about as well. Someone said China did not ban Nvidia chips. They did ban their AI chips, actually. That's in the news today. And he said, yeah, they are banning companies from buying it for AI. That's correct. That is correct. According to the news reports today, I imagine that'll be part of the negotiations, the tariff negotiations that are ongoing. We'll talk more about that. We're going to talk about what's been holding up the market and how we've kind of been disconnected from the overall economy. Also going to be talking about Solana, what's going on there. A lot of money coming into the Solana ecosystem has held up quite well. But what about the spot ETFs? And what about the market structure bill or the Clarity Act? What's going on there? And then in the deep end sector, guys, we are starting to see some serious traction. I've got some pretty bold predictions. I think the new meta, if you will, if we look back to earlier this year, we had the AI agents. I think there's a good indication of what the next big sector could be. It is within deep end, by the way. We'll cover 3 projects in there that I am looking to aggressively add positions to right now because I think we could see some major runs coming up. Anyway, oh man, I was traveling over the weekend, been a little bit under the weather again. I don't know, man. I had like the COVID, that what do they call it? The razor blade throat COVID a few weeks ago, and have some more symptoms that are similar. I don't know what's going on. My buddy that I was staying with in Michigan just tested positive, so hopefully it's not that again. But regardless, let's take a look at what's going on with Jerome Powell, with the Fed. Looks like the news is officially in. A quarter-point cut. Should not be a surprise. Okay, this is something we've been covering every single day on the live stream. I think the market has largely baked this in. So the question is, like, how is the market going to react? We're starting to see a lot of people jump onto this narrative that it could be a buy the rumor, sell the news event. You guys remember this is from 6 weeks ago. In one of my live streams, I actually talked just about that. As of right now, for sure that we'll see rate cuts in September. I don't know that that's going to be bullish, though, because you start seeing rate cuts in many cases, and you look at this historically, that means the economy is breaking. They have to cut rates. It's not because they want to. It's because they have to, and they're being forced to. And I think there is a chance that this ends up being a buy the rumor, sell the news event when they finally do cut rates. Yeah, this is something that for the last couple of months I've been talking about, that this could be the case. We're seeing a lot of accounts, a lot of economists now jumping on this concept that, hey, we could see this be the buy the rumor, sell the news event. How are the markets reacting right now after the announcement? We've seen some sell-offs for sure. I think one of the things, looking into how the stock market has been propped up and consumer spending has been propped up, it can kind of give us some more insight into what the threats to the market are at this point. And what am I talking about? Of course, I'm talking about the fact that, well, number one, the wealthiest 10% of Americans own 93% of the stock market. Okay. So that's why, while it does feel like half of the country has been in a recession for the last 2 years and half the country is really feeling it, if not more, the stock market has not really correlated, right? We've seen the stock market hit new all-time highs, and we're like, what is the deal here? Why it doesn't make sense? Well, if you look at the numbers, top 10% of Americans own 93% of all stocks, the highest level ever recorded. Meanwhile, the bottom 50% of Americans held just 1% of stocks in the third quarter of 2023. So obviously that's one reason. And then when you break down the figures a little bit more, and this is pretty staggering, actually, when I was doing the research for the show today, in the third quarter, the bottom 50% of households held 4.8 trillion of real estate assets, but only 0.3 trillion worth in stocks. The top 1%, by comparison, held over 16 trillion in stocks, guys. That is like 50 times. The top 1% has 50 times more stock holdings than the bottom 50% in the country. Okay. And more in real estate assets as well. Again, that's just the 1% compared to the top bottom 50%. And that is why, a big part of why we can see the stock market can kind of be irrational. And a lot of that's been held up by consumer spending. When you dig into that, let's see here. The top 10% of income distribution were behind roughly half of the consumer spending in the country. So again, we have this scenario where the wealth gap has gotten bigger and bigger. The wealthy have gotten much wealthier, but they're holding up the stock market because they own most of the stock market. They're doing most of the consumer spending because they have all the money. So that is why we're seeing the stock market is holding up while a large percentage of the country is really struggling right now. And there's a reason why I'm bringing all this up, okay? And we're going to get to it actually right here in a minute. For those in the bottom 80% of income distribution that's making less than $175K a year, spending has simply kept pace with inflation since the pandemic. But the top 20% of households have fared far better. And those in the top 3.3% have done much, much better. So again, we're seeing this widening. But here's the key, guys, and this is it. As long as they keep spending, the economy should avoid recession. But if they turn more cautious for whatever reason, the economy has a big, big problem on its hands. So, what could cause people to get a little bit more squeamish and cautious? Well, I think it's fair to say that the quarter point rate cut was already priced in. But what about some unforeseen news? I mean, we know for one, the job market's been much worse than people realized. We kind of knew that. We've been talking about that, but it disconnected from the stats we were seeing. But now we know that was bad data, frankly. But what about other news? How about news pertaining to the biggest company in the entire world, the most valuable company in the entire world? Well, this just dropped today. The Nvidia CEO, Jensen Huang, came out and said that he's disappointed after the report that China has banned its AI chips. Of course, this has just dropped today, guys. If you all remember, there's been some back and forth here throughout the year where Trump did ban us from selling chips into China. They agreed in August to a new deal where we could export licenses for the H20 AI chips in exchange for 15% of China's sales. Of course, people were kind of up in arms like, is this even legal for the U.S. government to be getting 15% of the revenue on chip exports? That said, Jensen Huang has now weighed in on this, and he said, we probably contributed more to the China market than most countries have. And I'm disappointed in what I see, but they have larger agendas to work out between China and the U.S., of course, talking about the ongoing tariff negotiations. We've guided all financial analysts not to include China. The reason for that is because that's largely going to be within the discussions of the U.S. and Chinese government. So, Nvidia is a huge bargaining chip when it comes to these negotiations. Now, of course, the story here, and we've covered this over time, we've got a few different, things that have led up to this event taking place. The first was this report that we covered back at the end of July, that there was a reported smuggling operation of Nvidia chips. And in better detail here. So at least 1 billion worth of Nvidia restricted chips were smuggled into China after the Trump administration put further restrictions on chip exports. It says that Chinese distributors began selling Nvidia's restricted B200 chip to data centers for Chinese AI groups in May, per documents. Okay. Of course, this was denied, or at least Jensen Huang denied that Nvidia had any direct knowledge of this. I believe that is highlighted in here. That said, though, according to lots of reports out there, the black market is thriving for the Nvidia chips in China. Estimates between 10,000 and several hundred thousand banned Nvidia chips have already been smuggled in 2024 alone. It says that they're planning to install more than 115,000 restricted NVIDIA chips in some 36 data centers across the country. Now, Wong has consistently maintained there's no evidence of this, blah, blah, blah. We're saying, our Commerce Secretary is saying, it is happening, okay? Well, this, of course, led to the reports that we were installing tracking devices in our products. So this was a report that came out in mid-August. Of course, we have denied this as well, or at least Nvidia has denied this. But anonymous sources, this is by Reuters, by the way, claim that U.S. authorities are planting tracking chips in Nvidia hardware as part of their investigation into alleged smuggling of banned AI chips into China. Of course, Nvidia spokesperson came out and said, we don't install secret tracking devices in our products. So at that point, there's already reports that China was starting to caution the companies within their country to stop buying Nvidia chips. And then you add this story, and this just came out a couple days ago. China is now saying Nvidia has violated anti-monopoly law after a preliminary probe. So this has to do with a company that Nvidia purchased. So says China's market regulator said that Nvidia violated the country's anti-monopoly law. That is the China State Administration for Market Regulation, SAMR. They opened this investigation into the acquisition of this Mellanox, which is an Israeli technology company. So at the time, they cleared it. Let's see here. Where did it say that? They opened an investigation. I thought it said somewhere that back when it first happened, they did clear it. But let's see here. Okay, but it said that they did not specify how Nvidia had allegedly breached the country's laws. Okay, so this is another one. Jensen Huang has publicly called for American firms to be allowed to sell in China, saying that the local artificial intelligence market will likely reach around $50 billion in the next 2 or 3 years. Of course, this was going back. This is when Trump did reopen sales. But obviously, all that's for naught, because at this point now China is the one that is pulling the rug, if you will, saying that their companies are no longer allowed to buy our AI chips, NVIDIA's AI chips. Well, how big of an impact is this going to be? And that's the big question that nobody really knows. We can see, man, let me reshare this real quick. I tried to go to a direct Ethernet connection because I was through Wi-Fi, thinking that was the reason why I was having browser issues, because I'd lose connection from my browser, but apparently that's not the case. All right, here we go. So this is a really interesting article from late August that I found. Says that last fiscal year, Nvidia made $17.1 billion in revenue selling to China, making it the company's 4th largest market, allegedly. Okay, that represented, they say, 13% of its total sales. The only concern is that Chinese sales aren't really 13% of the company. That's just what we know about. Okay, so the number 2 and 3 by country would be Singapore and Taiwan. But they did acknowledge in some of the footnotes in their quarterly filings that customers use Singapore to centralize invoicing while their products almost always are shipped elsewhere. Okay. And it says that it is presumed that much more than 13% of the company's sales are actually to Chinese firms. In fact, some analysts warn that it could be up to 1/3 of NVIDIA's revenue. Okay. So this is a much, much bigger deal than you would know about just by looking at their disclosures. Okay. It is becoming more and more clear they have been circumventing, and they have been a much larger percentage of NVIDIA's revenue than we knew about. So this is a big deal. Okay. And you talk about events that could lead to a sell-off, to panic selling. Well, the largest company in the entire world, that certainly could be a factor, guys. And this, of course, on a day when everyone's looking at the rate cuts and what the FOMC meeting, what Jerome Powell says, the FOMC meeting, this is being largely overshadowed, but this is a really big deal. Okay. Especially when you consider the fact that the stock market's been propped up by the uber wealthy. All it takes really is for one event for people to start freaking out a little bit. And I think something like this, a third of the largest company in the entire world's revenue being at stake, that's a pretty big deal, guys. That's a pretty big deal. One of the things I covered, though, and to say we might have a sell-off potentially in the back end of September. This is what a lot of people are calling for. I'm not saying that's going to happen, but I think it's very, very possible. There's still a lot of money on the sidelines. And I think there's a lot of people that are kind of waiting for a pullback to push money into the markets. And one thing I've been bringing up is this wall of cash, if you will, that's in money markets that's been sitting there on the sidelines over $7 trillion. Does say, though, this wall of cash theory, which contends lower interest rates will lead to a flood of cash into stocks and drive a new rally, has been debunked many times. You've seen a lot of these posts on X. I actually looked into the actual figures here, by the way. If you look at these money market funds, retail is responsible for just under $3 trillion of that. Institutional is right at $4.3 trillion, but a total of $7.3 trillion is on the sidelines in money markets right now. I bring this up because the timing of when this could flow in is very interesting and aligns with a lot of the other catalysts that we're going to talk about. But if we go down, it says, as the Fed starts to lower rates, the roughly $7 trillion sitting in money market funds will gradually flow into more risk on assets, including stocks and bonds, as savings rates become less attractive. So, of course, as the Fed lowers rates, you're going to see the yields on those money markets start to drop off. People are going to be more likely to push money into other investments, into equities, into crypto potentially. Follow the institutional money flows and the levers there, of course. But we should start to see this money flow into markets. Could we see a sell-off over the next week or two potentially? And I thought this was very interesting context, though. If we look further down here. Says the money market won't move next week, though, in the immediate aftermath of a Fed decision to cut rates, because unlike Treasury bills, money markets have a weighted maturity of 30 days. Therefore, assuming the Fed does cut rates Wednesday, which now we know they have, Treasury starts to go lower, but money markets take a month to fully move lower. So, in other words, just because the Fed is cutting rates today, the money markets are still going to keep their higher yields for about the next month or so. But that would lead us into middle of October when we could start to see the money from these money market funds flow into markets. Well, that's very interesting because that is also when a lot of these Solana spot ETFs could be approved. Okay, if you look at, I think it's like October 16th. Actually, we'll talk about the exact date there. But of course, could we see volatility? I think we certainly could. This Nvidia situation is something we really need to keep a close eye on. Okay, because that is a really big deal, guys. Of course, looking here again, the most valuable company in the entire world at $4.138 trillion. What happens if a third of the revenues cut? I don't think that it's going to be a prolonged thing, guys. I think that this is going to be a huge bargaining chip when we have the ongoing tariff negotiations, and will get sorted out at some point. But again, it could cause some panic in the markets. It could cause a sell-off potentially, especially when you consider like a lot of people were thinking it's going to be very, very bullish having these rate cuts, but that's been baked into the markets. We've seen a lot of buying leading up to this announcement. This is certainly something that is unexpected to a major extent. Let's take a look at the crypto markets, though. Actually, let's see what's happening here. We have Bitcoin still hanging out, man. 115,626. Not bad. I'm seeing a lot of economists, a lot of people that do, extensive TA saying if we can break above 120, that's, we could see a major flow into alts. Again, I've been beating that Solana drum for a long time. I'm going to talk more about that here in a moment. And then what sectors specifically within DePIN I think we could see really do well on how Solana is getting behind DePIN right now. Ethereum. Also not bad, man. Just it's hanging on. So we're not seeing any major sell-offs. We're kind of seeing things stay where they are. Solana has been the big winner, though, guys. We started really beating this drum on the live streams back when we were about $177, $178. And we have just seen a steady uptrend since then. And we love to see it. And if you look at the poly market betting odds What will Solana's price be before 2026 by the end of this year? Right now, we're sitting at about a 50% that we will break above $310. So new all-time highs, sitting at about a 50-50 chance. I think we'll see that likelihood start to increase, especially if we see some of the catalysts that we've been waiting for, the market structure bill and the Solana spot ETFs. Of course, that has not stopped institutional money from flowing in, though. If you look at some bigger announcements today, you have CME Group plans to launch options on Solana and XRP futures. They've already had Solana XRP futures, but they're launching options on those. It says that it's expected to happen on October 13th, of course, pending regulatory review. Very interesting timing there, too, because that happens to also be when the new deadlines for the spot ETFs are, October 16th. So could we see all this come together, where we have the spot ETFs get approved? We have the market structure bill is a big part of this, and I'll talk more about that in a minute. But you also have the rate cuts are going to start having their impact on the money market yields around mid-October. That, I think, is when we could start to see some serious capital flow into the space, in particular into Solana. But do we have to wait for the market structure bill to pass? I had something pulled up for that, but I don't know what happened to that page. So right now, the market structure bill is expected to pass by the end of the year, they're saying. Remember, Cynthia Lummis came out and said that she hopes to have it done by Thanksgiving. The big hurdle here has nothing to do with crypto at all. It's the budget. So our politicians are going to have to meet and decide on a budget before the market structure bill gets passed. So that could be a big holdup here. And I think the big question then is the SEC waiting to approve all these spot ETFs until the market structure bill passes? And seems like that could be the case. And this could get delayed. But if we see the spot ETFs get approved in mid-October, guys, we could see some serious fireworks the rest of this year. And I think either way, I think we're going to. That would just really give us like the alt season I think we're waiting for. But I think we still are going to see DePIN move because the institutional money is still flowing in. This is the newer Solana treasury company that was announced not too long ago, a couple weeks ago. Forward Industries. Of course, they have backing from Galaxy Digital. And they announced this is today, another $4 billion for their treasury. So they're going to be buying a lot more Solana. Okay. You had another announcement today. You had DeFi Development Corp. They announced just today they bought another $15 million. We had another one, Helios, I believe, was another one that just was announced like Friday or something like that. So the Solana treasury companies not only are more coming in, but you're seeing bigger and bigger purchases happen. Remember, and we covered this last week, Solana's market cap is like a fourth, maybe even less than that, a fourth of Ethereum's, and roughly 2/3 of the tokens are staked. So these huge purchases, these types of purchases that we're seeing and that we're going to be seeing should move the price more than what you would see with Ethereum subsequently. Now, I pulled this up and I have some more context here now. This is from Blockworks, and they have a tracker on all the treasury companies. And looking at the Solana one, and this is updated, I found out updated, I believe, every 6 hours, okay, is when these figures are updated. So you look at the different Solana treasury companies, and there's one that's a big outlier to me right now. If you look at the fully diluted MNAV, so this is essentially the market value, total market cap divided by the underlying assets that they hold and how much Solana they hold. But this also includes future dilution. So if they're making these purchases, the stocks that they're the shares that maybe haven't been issued yet that will be. Okay. So it's kind of a look into the future, slightly into the future to see what that premium is. UpXE right now is trading at a far lesser premium than these other ones. In fact, you look at Forward Industries, not saying that Forward Industries is not going to be a good hold, but it looks a little expensive to me right now at 2.39 with its fully diluted. We've seen some of these other ones climb up there and they come back down to earth. We saw UpXE do it. We saw MicroStrategy do it. We've seen it with other assets. I think right now something you're seeing with this forward industry is we've seen a lot of buying. Can it hold this much of a premium is the question. I have my doubts. So while I am looking to get positions and DCA and get further positions in these, the only one I'm really attracted to adding to right now is UpXE, just because the fully diluted MNAV is by far the lowest. It is the one outlier in the group. The rest I'm going to kind of hold off right now and expanding, especially as we might see more volatility and downside over the next couple of weeks. But this is a really good tracker to keep an eye on. I would highly recommend bookmarking it. Go to Blockworks X page, and you can find this very easily. Or you can look at the URL here. It's blockworks.com/analytics/treasury-companies. But it'd be much easier to go to the Blockworks X page where they have posted this. And looking at UpX, you're now sitting around $6. So again, looking at their fully diluted valuation divided by their underlying assets, that is the most attractive by far. Okay, up to 608 of all the treasury plays here. 608 now, so it was just at 6. This is moving up a little bit. All right, we're going to keep a close eye on the treasury plays, because the big question I think for me is, okay, can they continue to charge a premium? One of the things, I was talking to Tyler about this as it moves up again, they're getting yield. They're getting like 7% yield on staking the Solana they're holding. So that in and of itself should create a premium, okay, for holding shares of their company. So how much more of a premium is there above and beyond that? Did the NASDAQ rules that recently took place change the premium people are willing to pay? All I know is this. When you look at, again, the different Solana treasuries, this is by far the outlier, and it is by far the lowest premium right now. Other reasons why Solana could take off. This is crazy, guys. Have you seen these creator tokens? Check out this video from this guy. He's live on treadmill to 100 million is the token he's created. This is him calling his employer.
I unfortunately have to quit. I am actually employed by Pump Fund, and I'm a Pump Fund streamer now. It's changing my life for the better, and I'm changing people's lives too. I appreciate the opportunity you gave me, but I have to quit, go Ralph mode, and run it to 100 mil because I'm a runner. And thank you, Elon, for this amazing opportunity. He's my new boss now.
This guy did apparently make 155K in creator fees. Oh, man. This is just the craziest stuff, though. Like, explain to me how this is sustainable. Okay. The answer is it's not. It's just a matter of how long is this going to run? How long are these creator tokens going to run? Pump.Fund, it is what it is, guys. I think it pulled a lot of liquidity from the market over the last year and a half, but there were opportunities to make money there. But now you have people quitting their jobs to run with their creator tokens. That seems a little bit like a bubble to me. I don't know about you guys. But I think it is worth noting this is on Solana, and it is getting a lot of traction. This is what Elon, the creator Pump Fund, had to say about it.
Projects, and of course, a large part of our success has been driven by the fact that we're in Solana, without a doubt. The fact that there's so many traders, the fact that there's so much activity, so many great ecosystem projects, and of course, an underlying blockchain that can handle all that load is, and that user experience is something that has definitely contributed to the massive growth of the platform.
So Solana obviously getting eyes on it for that reason. But the question I think I have is this, as we get institutional money flows in, obviously we have the treasury companies, as we get the spot ETFs approved, is this what Solana wants to be known as the degen chain for meme coins? Certainly it creates a lot of fees. It creates a lot of usage on the network. But if they want to be taken seriously, and maybe they don't care, but I'll show you why I think they do. I think they're going to want to have a renewed focus on actual utility. Okay. And that is why I bring this up, because if you look at the Solana Foundation website. This is solana.com/solutions. They have a DeepIn section dedicated fully, not only to covering DeepIn and what it is, but they have their own DeepIn report. They even have they have developer tools to help people launch. And they've highlighted some projects here, some notable ones we cover all the time. Of course, we've got Helium, Render, HiveMapper, GeoNet, Grass on there. Other ones you'll notice on the ticker below, 375 AI. They haven't had their token launch yet, but it's coming. They have they have Wingbits on this scroll. Oh, yeah, there it is right there. So XNet's there. So to me, it seems very likely that as we see Solana get a lot of traction, we're already seeing people front run the catalyst coming in Q4. Believe they're going to want to push the emphasis on utility, on builders, and away from being a degen pump fund network. Okay, if they want to get real investors. Maybe I'm wrong here, but the fact they built this on their actual page, I think, would lead me to believe that it is important. They also have other videos on here from Jules Erbach, of course, with Render. You have Ariel with HiveMapper. You have Helium on here. But if you also look at their page, their official page on X, and I just did a DeepIn search, they have a lot of DeepIn posts, guys. DeepIn season. They got Anakoi highlighted. Talking about Capitol Hill edition, okay, for Crypto Week in DC. Oh, one other thing I wanted to call out here too, actually. Community, Solana Breakpoint, guys, December 11th through 13th. Every year, this has been a huge, huge catalyst for a lot of projects built on Solana. That's how I found No Sana 2 years ago. It's been almost 2 years. That thing did up 350x over the course of the next 3 months after I found that and put a video out on it. Solana Breakpoint is always a huge catalyst for Solana-based projects. So again, coming up in December. So, could we see a big run-up starting in October? We have, what do we cover already? We have the spot ETFs. We have the money market funds that we could start seeing that flow into crypto assets. As Solana gets a lot of capital flow, could we see utility, right? You have Solana Breakpoint coming up in December. Q4 is shaping up to be a massive quarter. But what could the next major category be? Okay. It's hard to sometimes find the next major narrative. If you remember last year, we did see DeepIn have a nice run. Towards the end of last year, we saw the AI agents. I think we could see robotics, and we're starting to see it a lot on the timeline. We're starting to see some of these projects pump already. I think robotics could be the next big one. You have Nvidia already, who came out. Jensen Huang came out and said that robotics is their biggest opportunity after AI. Said other than artificial intelligence, robotics represents their biggest market for potential growth. And self-driving vehicles would be the first major commercial application for the technology. You have Vader over here, built by Virtuals, talking about how robotics could be huge. They mentioned a couple in here. Aoki, we've been talking about a lot recently. GeoNet's in there. And I want to highlight both of those. Take a look at GeoNet, fueling the future of robotics. Mike Horton has been talking about robotics a lot. Oh. And what has GeoNet been doing? Well, it has been by far the best performing. Yeah, I wouldn't say by far the best performing. There's a handful of DeepIn projects that have been doing quite well. GeoNet, obviously, over the last month being one of them, up over 31%. Still only a $63 million market cap. Being highlighted for robotics, I believe this, physical AI or robotics sector is going to do very, very well. I think GeoNet can absolutely explode from here, guys. We've already talked a lot about how they're moving to Solana, making it their main chain. One of the things Mike Horton talks a lot about is that they've gotten really, really good support from the Solana Foundation, and they are now really touting DeepIn all over their website, all over X. GeoNet, to me, is a very clear winner. They have all the fundamentals in line. Well, another one that coincides with this is Rover, we've been talking about a lot. They have their exchange listing coming, their first major exchange listing coming up on September 23rd. Again, they're doing LiDAR. They're working in conjunction with the GeoNet network to gather data that's going to be used for training autonomous vehicles, okay, robotics. We covered this last week. Remember, I talked about how they had their rewards wallet get compromised. So we had that video right here, and I said, I am buying right now. This is a one-off event. I'm buying. Well, since then, we're up 33%, okay, just in the last week since that video. First exchange listing coming up in 6 days. $1.3 million market cap. Giving me early Hive Mapper vibes where the team unlocks haven't happened. The investor unlocks haven't happened. There's not a lot of tokens out in circulation. An exchange listing, and now granted it's not Coinbase, but an exchange listing could move the price quite a bit potentially. We're already seeing a nice bounce. They're partnered with GeoNet, and they have the robotics theme coming. Okay. Very clear. Then you look at Aoki. We've been covering them a lot recently. You look at their website, and there's some good videos they posted recently about what they're doing, but we are building an external sense of space that machines and AI can use collaboratively to understand the physical world. Okay, one of the videos they put out recently, the robot can go into an area that it doesn't have, onboard maps for, scan a QR code, knows how to navigate that space in and of itself. Okay, they are doing some massive things. And I think when you look at other companies and what type of attention they're getting right now, this just happened. This Figure company just raised its largest round of funding yet, a sign of growing investor interest in robots designed to work alongside humans in warehouses, factories, and other settings. They raised $1 billion, over $1 billion, at a $39 billion valuation. The money is starting to flow into robotics. I think the deep end projects in robotics are going to do really, really well. When you look at this, again, $39 billion valuation, Aoki is sitting at a $59 million valuation. Okay. Down 9% over the last 24 hours, but you look over the last month, over 115% up. This is built on base, by the way. Also, did you see that there is there's now a merger, if you will, to easily move assets back and forth between Base and Solana? Okay. Those to me, obviously, Base, I think, has a lot of institutional interest. Brian Armstrong's done a really good job of working the political side of things. I know people have mixed feelings on that, but regardless, Aoki to me is one that I'm looking to aggressively add to. Rover, I'm looking to aggressively add to. GeoNet, already one of my biggest holdings, looking to continue adding more. I think all three of these have the potential to do really, really well. And again, hitting that robotics sector of deep end, to me, that is such a clear next alpha in a narrative that I think is going to play out really well in Q4. So, in summary, the rate cuts have happened. They're in line with what we expected. There could be some threats over the next week or two, potentially for some sell-offs. I think October is when things could really rebound. Obviously, any news can break at any moment and change this stuff, guys. But there are so many catalysts in Q4 lining up. Solana seems to be the next clear flow of money. We're already seeing people start to front run it. It seems like they're really interested in pushing utility. And obviously Deepin's an obvious choice there. Okay, so all the work we've been doing this year, I think is going to be so worth it. And it's going to be nice to see the prices catch up to some of this stuff. But we've been focused on the fundamentals. I think, guys, we're in the right place at the right time. I'm going to leave you with this quote that I came across. I thought was really great as we close out the show here today. The best way to predict your future is to create it. Couldn't agree more. That's what we're trying to do each and every day, guys. We're trying to create our own future. And I think we're in a great place right now. The emergence of AI, we see the intersection of AI, of blockchain, of robotics. It's all happening right here, right now. Pack your bags, baby. Not financial advice. That's what I got for you today. Happy hump day. We'll be back tomorrow, and I will be hopping on a space here in about 15 minutes, the DABA space. By the way, someone did comment that DABA onboarding was super easy, guys. If you haven't done it yet, get on there. Just go to the DABA onboarding link. They've posted it all over their socials. Super easy process. You can pick your LCOs, get everything onboarded, and then you're ready basically for the token launch that's going to be coming up very soon. So very exciting stuff happening there. Guys, there's a lot of projects we covered, like DABA, like Deep Network. Add 375 AI to that list. Exhibits, a lot of big token launches coming in Q4. Could be the perfect timing with everything aligning in the markets. We'll see how it all plays out. Y'all have a wonderful day. Peace.